With that being said, now that we started the recording, this is Vince Como. Welcome to the Tax and Follow-Up webinar. This is for informational, educational purposes only. This is not tax advice, as I am not your accountant, and certainly not a CPA registered in your uh, city, if you will. So my goal is to educate you guys about some of the things that I have learned that are some possibilities and certainly available. And keeping in mind with that, get somebody who understands what the heck they're doing, guys, because what I have learned is there's difference between tax preparers and people who really do taxes. So if they don't have some of the understanding of some of the elements that I'm teaching you tonight, and I can make this information available. We are recording, as Vicki asked, but secondly is I can make the PowerPoints available to you as well. But if they don't have the understanding literally of the information I'm giving you, you probably need to seek somebody else out. I've had to let some folks go to make sure I had the right person that can really do what I'm looking for. And I want to just go ahead and encourage you one quick thing. I'm going to try to pull something else up here real quick. I hope you guys can see this. Right there, Ron Mueller, great book, home-based business. In fact, he is a network marketer. He is a CPA, and he is a tax expert, but he works with network marketing companies. I know for a fact Zango and other companies have utilized him in the past to come and do tax seminars. So you can actually look him up. It is as simple as you can see the thing up at the top, but homebusinesssavings.com, or just type Ron Mueller home business tax savings. Ron Mueller, as you can see there, home business tax savings, and that'll come up. I don't know that you need his whole, if you will, program, but the book is worth it. The book itself, I've found some great information that I've utilized, in fact, some of which is in this presentation, combined with some other experts, if you will. The one thing that I do like about his book, he lays out a few things that I can give you for free, some of which cost the extra money, but it gives you the ideas of where you can go and grab them. As simple as even keeping the mileage deduction, and whatever works for you in keeping track. I would recommend having something inside your car so that when you jump in your car, you write it down, look at the odometer and write down the mileage, and then the mileage when you return, tie it in with your calendar, what event that you're going to, because you realize when you travel somewhere to do business, whether you're going over just to visit with somebody and share some information with LifeVantage, it is a tax deduction. So take advantage, guys. I mean, honest to goodness, I'll just tell you quickly. I sat with my tax preparer or tax expert, if you will, this past year, and he showed me, and he blocked out the name of a surgeon, and he showed what our business had made, and we were really similar. The surgeon and what we were making were really similar, but where he spent over 70,000 in taxes, we were under 14. So I mean, it was a huge difference in savings, if you will, when you combine mine and Dr. Nettles together. Compared, I mean, it was close to 40 some odd $1,000 in savings compared to what he paid as an individual versus what we paid as two individuals. So take advantage of this information. Hopefully you guys seen that, you've got it, and now I'm going to go ahead and move forward. If somebody needs that at the end, I'll go ahead and recommend that one last time, but let's jump back into the presentation. All right. So Uncle Sam will absolutely pay you. The one thing I will say to you, this came off of Ron Mueller's brochure, that there are some other elements that he has that I want to talk about briefly, and that you guys realize that it is actually an advantage of doing business by owning a business, by having a home-based business. And some people will literally join your business simply because of the tax savings. Do you understand that? What I'm saying to you is this is another way of marketing what we do at LifeVantage with other folks because of the ability of having the savings of what they're doing as a W-2 person. And there are brochures that are designed, as you can see this one, that will help in educating those people that you are prospecting. So once again, as I always say, when inviting people, finding out the person's needs, wants, desires, if it's somebody who's making a lot of money, who's W-2'd, but looking a way to do something on the side and save a little extra money and retain more of his income, you got another way to market this business. So I just want you to keep that in mind is there is an advantage to owning your own network marketing business, home-based business, and we're going to walk through a lot of those elements. That's something that you can actually utilize to promote your business to other prospects, if that makes sense. And there was no charge for that little extra information. And you can see that at that website that I showed you. Okay, choosing the right business entity. So when you sign up for LifeVantage, let's just give a quick example, is you sign up as an individual, your personal name. You are what's considered to be a sole proprietorship, okay? Now, there obviously are some differences in these different types of entities and what I would call asset protection. Now, in a sole proprietorship or a partnership, you're probably at the highest level of risk, if you will. Not a bad thing of having those. Please don't think you have to run out and create a corporation tonight. But what I would tell you as you begin building this business and are looking for additional ways of saving, once again, more of your income by the tax savings that go along with it, as you ramp up to these different types of entities, there are far greater deductions, and I'm going to go through them. But from an asset protection, a limited liability company is outstanding. It separates you from your personal assets, meaning if somebody got hurt at your home and they wanted to sue you, the company is a separate asset, separate entity from you personally. Same thing with an S and C Corp. Something that most people don't know is that you can actually take a limited liability company, which is the easiest way of setting up any corporation. I don't care in what state you live in, they are really easy to set up. But you realize that you can make them taxable as an S Corp or as a C Corp, which limits the paperwork and the requirements done from these two different types of entities. Meaning you can set up a limited liability company and choose to be taxed as an S Corp, which is what I am. Or you could take the higher level, a limited liability company, and choose to be taxed as a C Corp. Now, there are some difference in requirements of reporting by having monthly board of the director meetings, but they're very simple to do in a format that you can do through a limited liability company, or you can simply create S and C corps. Once again, they're a little more cost prohibited, if you will, in the initial setup. Limited liability, less expensive, easy setup, and can be chosen with a simple form to be taxable as a C or S corp. Now, if you and a spouse sign up, what do you think that is? That is literally a partnership. Or you and a friend sign up as an applicant and co-applicant. That is a partnership with LifeVantage. So keep these things in mind. And most people that I know are limited liability companies because of the ease of use. But take in consideration what I said about creating when the time is right for you. And I certainly can help you guys when you want. Just speak on the phone, make a phone call, and just maybe give you some more advice, if you will. But a limited liability company and initially maybe just an S Corp, and as you elevate and build that business, a C Corp, because there's some things that are quite incredible that you can do when you start to earn high levels of income where you can have income distribution between entities. Meaning you can have a limited liability company, you can have a limited liability C corporation, and there's a threshold of income that pushes you into a much higher bracket, but that you can actually pay your other company a management fee to basically have an income distribution between entities. Not trying to get over your heads there, guys, but keeping some things in your mind so that you have further opportunity to have tax savings in the future. Pick what's right for you. You're getting this thing started with LifeVantage, you're new to LifeVantage. There's nothing wrong with the sole proprietor partnership. Excuse me, but as you start to move along and want to once again save more income, I mean, in Arizona, it's like $85. $85 to start the darn thing, and another 20 or $30 because you have to publish it for 3 straight weeks in one of the local papers. Simple to do, and the forms are all generally online with your corporation commission. So you could go to whatever state you're in. Unfortunately, for those of you in California and Seattle, a little more difficult, but understand as a resident in California, you can actually choose to have your limited liability company set up in places like Las Vegas, Alaska, which have greater protection for those limited liability companies, less cost, if you will, but at the same time, you still are taxable, obviously, to the state that you're in. I'd love to take questions, guys, but I really can't. So I'm just going to walk through this information. What I would ask you to do is to write some notes down. Email me, and we can talk. Give me a call. We can talk. Guys, you know my email. If not, Freedom Reigns, Freedom, Freedom, Reigns, Reigns, at gmail.com. And if there's any part of this presentation that you'd like, because I'm going to show you some other pretty cool stuff here in a minute. Now, the IRS, and keep this in mind when prospecting somebody new about the advantages of owning your own business, you have to have an intent to make a profit, right? Common sense without question. You have to be reasonable in your deductions, meaning you can't start a business and have $175,000 in deductions. Probably not going to, and make $42, right? They're not going to look too well at that. You know, yes, in starting in that first year or two, there could be some additional expenses before you're profitable, but at the same time, at some point, they're going to look at, so reasonableness is always considered. This is very important, and it's something that you hear me say all the time, is we need to be consistent with our plan and activity, meaning we develop a plan, hold ourselves accountable, and have consistent activity. The IRS will not recognize you as a legitimate business if you're working under basically it's 4 to 5 days per week. Well, basically it's 4 to 5 hours per week. In essence, guys, it's saying spends 45 minutes 5 days a week. They look at basically 4 to 5 hours per week. I always say, you know what? I understand a lot of you have jobs, we have lives, we have families. At a minimum, and my personal belief is that really is it. 4 to 5, 6 to 8. Very doable. Having the ability of creating a little more momentum, duplication, and the ability to basically create more income, if you will. I'm going to take a moment. I just got an error message. Can you guys still hear me okay? Vicky, somebody, let me know that you can still hear me okay. Or did we lose you? Looks like we're still good. Okay, we're still good. Thank you. Please, guys, keep me in the loop because I don't want to be talking to nothing. Um, okay, next slide. Now, I just want to give you a quick example. Something I mentioned in the beginning is really to create wealth is obviously to retain more of what you earn. Giving you an example here of having, let's say, $24,000 of tax-free income, meaning tax savings, right? So we're able to save up to $24,000. You realize that when you look at all the tax rates and tables and put it all together, that's like making $60,000 of income by having that $24,000 in additional savings. That's how valid this is. Please keep this in mind. So that's why I want you to treat this like the business that it is so that you can begin saving that money. And if you want to keep it simple, I'm going to speak to that right now. Keep a separate credit card if you can and have your LifeVantage expenses on that credit card. I'm not even saying keep a separate bank account. I would love for you, if you will, because especially when you set up a separate entity other than that sole proprietorship or partnership, you need to establish a separate bank account in that entity's name. But as a individual, or as a sole proprietor or partnership, you can get away with it. But at some point, you certainly want to separate funds, and it's as simple as having a separate credit card to keep track, guys. Throw it all in a folder, and then utilize some of these other elements that I'm speaking to so that you can have $60,000 more in income, for goodness sakes. All right, I looked this up. I've utilized this twice in the last few years. It's basically an accelerated depreciation. And your accountant will certainly know what this is. I'm not telling you to go out and buy a boat, to go out and buy a car, but if you are running a business and certainly want to utilize this deduction, that accelerated depreciation is like 50% in the first year, and then the normal schedules after that. So what it's doing is it's front loading those depreciable assets, and it has to be, I believe, over 500, and it can be legitimately a vehicle. And there's some limitations to the 179, like the greater weight vehicles have a greater rate of depreciation and amount that's allowed for you. But just keep this in mind that 179, certainly a beautiful thing. The home office deduction, I'm sorry for jumping into that one first. The home office deduction, we're going to walk through that. I pray you guys understand that. I'm going to say this right now on the home office deduction. It can only be utilized as that office, meaning it's not a bedroom and a home office. So if you need to set up, one of the things that I was taught is set up your office, take pictures so that you have the information that backs up that this is a home office in the event of ever being audited. Medical expenses, insurance, those will only come to play with corporations, S and C corps. Hiring your kids, man, any entity can do this. I love this. I'll show you a form that I've utilized and certainly could be made available to all of you to hire your kids. So automotive expense, guys, keeping track of the mileage. Meals and entertainment, remember at 50%, right? Not 100% tax deductible. Simple way here is to, and we're going to walk through some of these elements in a little more detail, but I love having my calendar with the receipts behind the calendar. So when you're planning out each week, each month, have that monthly calendar where you went and whom you were with or what meeting you attended, and attach the receipt. You could write whatever. I mean, had lunch with such and such, so it was Mike and Melissa had lunch together reviewing the LifeVantage plan. And that can match to your calendar, to your receipt with the names on it attached to the back for that month, to that statement that you're utilizing for your credit cards. What a beautiful way of just keeping track of all your information in one file for that tax deductible event. Do you know that when you bought your business, it was tax deductible? Do you realize that your auto shipment, that $200 auto shipment, is a requirement per business center? It is a tax deductible event. Your magazines, your tear offs, the DVDs. I hope you understand that those are tax deductible. Supplies, right? The Vantage Pack, the Freedom Pack, whatever it is, those are all tax deductible events. You bought a business, you're building a business, and you're required as an overhead to running your business to basically have, if you will, having marketing materials, and secondly is having that $200 auto shipment. I hope you guys understand that. Okay, if there's any questions with that, once again, write them down as we're going through this. Email me, call me. I prefer you actually just even calling me and we can walk through them. Okay, home office deduction. There's a couple different ways of doing it. One is the square footage of the home office and that percent to the total, or the number of rooms. Let me give an example. Let's say you have 5 rooms in your home and one room is being utilized for the home office. Well, that is a 20% off of what the total expense of running that home. Did you understand that? So you have a mortgage, you have an HOA, you have electricity, you have cable, you have the phone, all the elements to running that home. That percentage that one room is to the total rooms in that home. Keep in mind, a living room counts, a family room counts. Just giving you an example. So the other way is the square footage to the total, meaning that room represents, let's keep it easy for me, 100 square feet. Your home's 1,000 square feet. That's a 10% deduction to running that home so that you can basically run your office within that home. There's a lot there, guys. I mean, most people don't realize that an HOA can be deducted. So, but it's the percentage to the total based off of the square footage or the number of rooms. The utilities, all those different elements can be written off. Now, the hallway to the bedroom to the bathroom, those don't count. Okay, it is strictly the square footage that the office is in, unless it's a dedicated bathroom to that. You could probably utilize that. In fact, I'm almost positive. Once again, I'm giving you tax advice. But if it's like a Jack and Jill utilized by another bedroom, it is not. Once again, only for office use. I mean, you realize you can even have a home gym that you offer to your business, but I'm not going to get too crazy. I want to keep this simple for you. Okay, something a lot of people don't know is that you can actually rent out your home for up to 14 days. Up to 14 days, meaning you can rent out your home to yourself to run, if you will, a board of directors meeting for C Corps, whatever the event that you might be having. So when you look at that and you think about, okay, um, if you have an LLC, S Corp, family limited partnership, these are different types of entities. You can actually have the ability, and C Corps, to rent. C Corps are only for stockholder meetings, the board of directors, but promoting an event that you might be having at your home with the expenses and the space. Like my example to you is that you wanted to basically hold a, let's say, a Super Saturday, and the local hotel, and I would get 3 quotes for what the cost is to rent the room, to run the projector, right? So you have to have audio visual because we're going to have volume and everything else, and the food, right? Whatever it might be to run that Super Saturday. Guys, get those quotes, put them in the file, and up to 14 days, you have the ability of utilizing your home rent-free, basically tax-free, that you can charge your business, or having those stock owner meetings and monthly board of director meetings. So just another ability. I'll go back to this. It is that IRC, you can look this up, 280-A. That is basically the deduction that we're speaking to. The 280-A is the statute that will give you up to 14 days. Okay, and I just gave you that information. So basically, you're running a comparison of what those rooms would cost. Now, don't you want to look at the same square footage or within reason, right? So meaning you're renting out, you need a 2,000 square foot room, or you need a 500 square foot room, and what that cost would be. And what, I mean, don't have a house that's 1,000 square feet and write off 2,000 because you had a premier school at your house. I'm being facetious here. You guys get what I'm saying. Has to be comparable to what the area is that's needed to hold the event that you're having, and to have those quotes match that. 14 days tax-free income. Okay, medical expenses. S corps have some limited ability. C corps have unlimited. But you know, your not only your medical expense, but basically the health insurance. Forgive me, trying to spit that out. So sorry guys, the ones that are running proprietorships, partnerships, you can't write this off other than in the tax, the 1040, if you will. But health insurance under C corps and limited under S corps have that ability to writing off the health insurance. Okay, hiring your kids. I haven't checked 2015, forgive me, but I got a feeling it's probably relatively the same. Tax free, so you definitely want to check this, but up to in 2010, it was $5,700 per kid that was under the age of 18 and over the age of 5. So what you can see there, 6 to 17, tax deductible up to $5,700. Now, when it says write off ballet, piano, clothes, and etc., you're not writing those things off. You're basically having the ability of hiring your kids for up to $5,700 that basically makes all these other elements tax free, if you will. You can utilize that income that you're saving to go and pay for piano lessons. And now all of a sudden that's virtually tax free. So what I'm saying to you is you can hire your kids with an employment agreement and pay them. And my point to you would be paying them monthly. You don't need to pay them weekly, and don't pay them once a year. Pay them monthly and establish a calendar and an employment agreement. Let me give you a quick example here. This is an employment agreement. Um, I'm not going to blow it up for you guys, but it is available through Ron Mueller, or I can email you the one that I utilize to hire my son and daughter. And what I would say is I've had them sign this and produced a calendar with the activity that's required. And in their activity that I outlined was specifically to pray and to utilize marketing materials to basically market our company at Freedom Reigns. So wearing Life Vantage clothing, and it's actually in where you can see duties required. Intercessory prayer for Kingdom Wealth Enterprises, all of my businesses, Freedom Reigns and Radiant for Life, um, and to advertise through wearing of clothing that's basically advertising our company. Or what about drinking the Axio, right, with the Axio bottles? Promoting your business by marketing with the marketing things that we have, marketing materials, the clothing, and simply even praying for our business. So this activity is actually on their employment agreement and on a calendar, and I pay them once again on a monthly basis. Okay. Eh, Forgive me, but I know there's questions that are popping up. Um, yeah, ignore the bus driving one. I can't take all these different questions. I apologize. But you actually can't. There is another deduction as driving a bus. Um, but in fact, I'm going to pull that out because I don't really think it's applicable for Life Vantage. Okay, hiring your kids. Automobile expense. I think the current rate's 57.5 cents. Let me give you an example of this. Once again, I would get some type of log and put it on your seat, put it on your visor, whatever it is that's simple and easy to use. And it's just by day, write down the event, the beginning mileage, and the ending mileage, right? Pretty simple. There's limitations like, traveling to another state. There's a different rate when it's over a certain amount of miles of that threshold, and you certainly can look that up. So those are something that people don't take advantage of. Those events that you're going to, those meetings that you're going to, those one-on-ones that you're having, those luncheons that you're having, you can keep track of that. Guys, you can go to work, okay, and back. That is not a tax deductible event. But however, if you opened a P.O. box in the name of your business, let's say, uh, it's in the vicinity of your work, meaning you have to drive each day back and forth. Now, it's not going to be taxed. So, meaning from the home to that P.O. box and back, that is a tax deductible event. And obviously, you can go from the P.O. box to your work and then home. So, what I'm saying to you is you literally can write off the mileage to work if you opened up the P.O. box in an area, obviously, that's located near your work and have a tax deductible event because of the requirement of checking your mail. Just saying here. Any structure, sole proprietor and on, guys. The 179 rule, that was the one thing that I talked about. Up to 50% in that first year, and then based off the schedule of that asset. You know what? This is also available for computer equipment, things that you're going to be utilizing in your business, office furniture. I believe the threshold is 500. If not, it can be fully expensed. Anything above that can be that accelerated depreciation and it is available for 2015. So not telling you to go out and buy a truck or a Jeep and get it all logoed up with LifeVantage, but you can, and there is a tax deductible event if utilized for business purposes. Okay, I spoke to this in the beginning. Vacations. Um, Now, keep this in mind. Going to Disneyland isn't a business trip. Going to Anaheim and presenting, then having the ability of going to Disneyland later on is a business trip. So the expense of traveling from home to the business, not to Disneyland, and the tickets at Disneyland. I think you guys are following me. Your lunch expense, why doing business, your meals, and the transportation to and from whatever event you're going to. And believe it or not, a cruise, a cruise is an acceptable manner of transportation. Meaning, if you had to have your board of directors meeting and there's multiple countries that are acceptable for the IRS, that you can that reg is right there, 162. Once again, only for C corps, because C corps are the ones that require to have board of director meetings. But you can have meetings, uh, uh, masterclass example, traveling to masterclass, that is a tax deductible event. Going to present an opportunity meeting in another state, that is a tax deductible event that could be combined with whatever the heck you want to do while you're there, right? So you have your to and from expense in that transportation, air, car, boat, whatever you want to go by, and the meals while you're working, right? Those are a tax deductible event for you. So while you're conducting those businesses, why not take advantage and have those expenses? So let me give an example. Can you actually go and promote your business? Meaning, you know what? Look up a couple chiropractors in a place where you're going to go and leave and keep track of that information, that you're going to leave some marketing materials because you're promoting, exposing your business. It might even be a cold call, and that's fine. What I'm saying to you is make sure that you keep track of what you're doing and where, once again, on your calendar to match the receipt to the event of what you were going for. So you're going to, here's an example, a winery, right? So you want to go to the winery on your anniversary. And I'm not telling you to go do business on your anniversary. Please don't email me on that. But I'm just giving an example. So you go out, you're having a personal trip, but you can go out and promote your business in that local city, handing out some marketing materials. Get a business card from that city. Easy way to keep track of from that place of business of where you conducted and tried to expose the opportunity of LifeVantage. Hopefully that makes sense. Um, I'm going to skip this one because it's only for um, uh, C corps. Basically, your spouse can sit on your board of directors, and literally, when having a board of director meeting, you have the ability of taking out the people that sit on your board, meaning you can take a date, take your wife out, buy her flowers, whatever, and that expense is tax deductible event. Literally, go to a theater, whatever it might be, during the day of that board of directors meeting. Equipment and tools, same thing. And I want to keep it, guys. I'm not telling you to go right off a mechanic set of tools. Obviously, not legitimate and reasonable in what you're doing, but what are some tools? A cell phone, a desk, a computer, a TV, right? Do you realize that a TV that you might even travel with to do presentations? Just keep these things in mind, and the acceleration depreciation obviously can be utilized if it's cost effective, if it's above that threshold. So what I'm saying to you though is, regardless, you can buy these elements and they are tax deductible based off of the value. Some are expensible in that very first purchase. I believe the threshold's over 500. So when it gets over that, like office furniture and things of that nature, has to be depreciated. But you can utilize that depreciation expense each year and write those things off. All these elements are a tax deductible event. Printers, all of them. And the printer cartridge, guys, your office supplies that's needed to run your home office, those are tax deductible. Your whiteboard, everything. Think about the different elements that you're using and write them off. Those are your equipment and tools. The pens, the paper, the marketing materials, all those different elements are tools that we utilize to build our business. Certainly not wrenches, but certainly computers, tablets, and all those other things, even software, right? Different types of software to build your business. Clothing. Um, if you put if it has that Life Vantage, the Life Vantage stuff on it, it's tax deductible. If you create a business and make a logo and put that on, tax deductible. Guys, we went and made our own clothes. We took the logos that were available in the back office, and those are under the library, and you can go back there. There's beautiful logos that are beautiful PDF files that could be sent to people that do that type of thing, that can sew on the logos onto your different types of clothes. Now all of a sudden that's a uniform, tax deductible, right? So by putting on that Life Vantage logo, if you will, marketing yourself, including your kids, no more Polo, man. It's the Life Vantage, man. It's Gene, and it's a tax deductible event because it is utilized in building your business. I'm running long on this. I'm gonna have to speed this up. Goodness, I've ran over. Sheesh. Okay, business gifts, promotional items, right? You're having a promotion, right? You're saying anybody who enrolls more than one person has the ability of getting a free bottle of Pro Tandem, right? Tax deductible event, promotions, and business gifts to running your business. Any business structure, guys, any business structure can be done. So just giving you some ideas. Like we gave out tablets, we preloaded them with software, and you know utilize those to promote our business, right? Having a promotion, having people, getting excited and doing the right activity to build their business, and giving those tablets away. Just another quick example. Life insurance only for C Corps, continuing education. There, all entities can do in some levels, meaning the business trips that we have, which are educational. But when we talk about college expense and different things, there's some definite limitations to that, and you want to look into that. The seminar expense, absolutely, as startup for businesses, that's once again utilized for C and S Corps only. Dependent care, once again, guys, C Corps can actually utilize and put into their forgive me, I'm forgetting the term here. When they have a board of director meetings, in the notes they can make it dependent care is one of the benefits that are utilized through working at your business. So obviously you can utilize that as well. Business gifts limitation is $75. Any structure, not promotional ones though. Retirement plans, 401ks, C Corp only, guys. All right, couple resources we're wrapping up here. Free resources, irs.gov. Home Business Tax Savings Made Easy by Ron Mueller. I'm going to show that again. Home Business Tax Savings Made Easy by Ron Mueller. That's his website if you want to capture that URL right there. And once again, if you didn't get it, I can get it to you later on if you still need it. Give me one more second. Let me jump back in. Okay, and lastly, the free mileage log, homebusinesstaxsavings.com. You can click that on and he gives that to you for free. The employment agreement for kids, that is not free. I think it's like $5. And once again, I have no problem with emailing you the one that I did. Just email me at freedomreigns@gmail.com. Guys, I just want you to know I gave you some just surface level things, some actually really deep things like renting your house out for events. This is once again not tax advice, but certainly something that you can communicate with your tax person, making sure that they're on the up and up, saying these are some of the elements I want to do. That Ron Mueller book, it outlines only a handful of what I had. I can make anything available to anybody that wants to go into this in more depth. Um, Pick an entity at some point. Remember, the greater the entity, the greater the asset protection and the greater the tax savings is, as you can see with those C corps, where I hope some of these pro tens and so on are getting the benefits of having their own, if you will, 401ks and dependent care and all the elements that you can write off. Just telling you guys, as you make more, we can save more, and we can all do it together, including that income distribution between different types of entities by having separate structures where you can pass off management expenses to another entity to lower the income based off of the other. That is it. I took freaking way too long. Did not cover what I wanted. For those of you who want to stay on, I'm going to run over. I'm going to run overtime because I committed to doing it. And I can also email you this wonderful presentation that was done by Steve Wheeler, our Pro 8 in our business. Absolutely love this presentation. I'm going to blow through this in the next 10 minutes. So get your pencils ready. If you need anything, once again, I can email it out. Okay. You guys have seen this probably before, but I'm going to put it in your head. 81% of all deals that are made are after the fifth touch. After the fifth touch. But only 6% of the people follow up more than 5 or more times. Meaning a lot of the fruit is left on the tree, guys. You have to have multiple touches. That's why we follow up. That's why I tell you all the time, keep track in your database, 1 touch, 2 touch. What was the tool utilized? What event did it occur? What was the last thing that they said? Because it may not be today, but it certainly can be tomorrow. Or as in my friend, I think I spoke about this on the Monday, one of our dear friends, 3 years it took, but she did sign up. Okay? When do we have follow-up? We have follow-up between the invitation. We have follow-up after a presentation. We have follow-up after enrollment. All the time we follow up, guys. I always say book a meeting from a meeting. Have a touch from a touch. So when you're inviting, you know what? You got to be mindful, first of all, as we talked about on Monday, of their circumstances. But understand, if it's the right time, they haven't felt what you felt, they haven't seen, and they don't know what you know. So that's why you certainly continue to invite. You invited, they didn't show up. When do you call again? The next day, you follow up. Man, we missed you. We had an incredible meeting. When can you be there? We want to make sure you get this information. One of the leaders is presented. It was so amazing. We're so excited on what this is going to do for us because of this. Right? Speak about your story, what you've seen, what your vision is. Keep this in mind, guys. Follow up until they see what you've seen, meaning they've gotten in front of a presentation, they got in front of the online presentation at minimum. From there, if they're still interested, then we move on to the meeting. Okay, I lost sound. Can you guys still hear me? Somebody else lost sound. I'm still showing that I'm good. Can you still hear me? You still can. Apologize for that person, but it was on your side. I got to keep moving. Okay, so we follow up immediately after the meeting to make sure if they didn't attend. If they did, we follow up immediately after the meeting, either that evening, and if you're not together with them, then certainly the next day, because as you know, most meetings end between 8:30 and 9 o'clock. But here's what I would say to you. In the invitation where you invited them to go to the Thursday meeting, book a meeting from a meeting. Say, great, I'm going to call you Thursday morning just to remind you. Call them Thursday morning. But here's the other part. Listen, we're going to talk on Friday. I'm going to walk through any questions that you might have and see where you're at. Book a meeting from a meeting. Guys, you invite them on Monday. Give them a tool to keep them mindful and on the right information till the Thursday meeting. So you give them something in between. If you're not in front of them, what can you give them? PubMed.gov. You can give them, once again, the online presentation to look at, a touch. Call them on Thursday, verify they're going. Let them know you're calling them tomorrow, as we talked about, and follow up. And from there, ask them if they're ready to get started. They are. Book a meeting from the sign up. Okay, they signed up. Within 24 to 48 hours, you're in front of them or on the phone with them doing the get start. You got to remember, we're booking meetings throughout this thing, and as you invite them, after you present to them, and after they've signed up, give them homework. Book a meeting every single time and never leave it open. I like restating it to them. So what you're saying is, on Thursday, you'll be able to take 15 minutes to watch this online presentation. Fantastic. I will call you at 6 p.m. Call them at 6 p.m. They watched it. Do the three-way or invite them to the meeting from there. So, hey, listen, we have some meetings that are available near you. What would be a good night that I can arrange? Have Big Blue Calendar up. Okay, so can you do, well, we have one on Friday. Can you do Friday? Great. I will talk to you on Saturday. Book a meeting from a meeting. Ask if they're ready to get started. Follow-up periods and the very next day, guys. Now, if they have said and they went to the meeting and they have said no, well, find out when, what are the obstacles? What are the things that we can overcome, and when can we follow up with them next? Because sometimes it's not no, it's just not right now. Keep that in mind as well. And always, 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 after enrollment, schedule a get start 24 hours and book their meeting, meaning their opportunity meeting. 24 to 48 hours, you're sitting in front of them, you're teaching them how to database, you're developing the why, what, and when. And guys, if you don't, we have them on. We're going to continue to educate on this. If you don't know how to do this and you're new, grab somebody who does, give us a call. We'll certainly assist in anything that we can. So get that meeting booked for the Get Start, get their opportunity meeting booked, get the invites going with your new prospects, teach them to duplicate, and basically how to build their business. Um, your calendar, it's really follow up, right? There's the invites. Vicky, I love what you sent me. Your accountability, it's outstanding. That you've set time to meet new people. You've set time to spend inviting and doing three-way calls, and you spent time for follow up. Guys, your database drives your calendar. Your database of the people that you haven't invited, people that you've just met, people that you have touched and you need to follow up with. You follow your presentation activity should be on your calendar, and the enrollment activity, the get starts, and then their opportunity meetings so that we can duplicate. I know I blew through that fast, and I want to apologize for doing so, but I thank you guys for staying on 30 extra minutes. Holy moly, I talked way long on, I even eliminated a few slides on that tax savings. Guys, I appreciate so much. So once again, listen to me. If you need any of these elements, freedomreigns@gmail.com, pick up the phone. You guys have my number. I can't go through all the questions one by one on these because everybody is individual, and I certainly can email you the follow-up. Email me at freedomreigns@gmail.com, and I will get you whatever you need, including that employment contract that I utilize for my children. Appreciate you. God bless you guys. Thank you for getting on tonight. Have a great evening.